From ancient time, gold has actual and symbolic value. Gold used for money exchange, also stored as valuable currency in emergency time, gold widely used to make valuable jewelry and other artifacts. Extraction of gold is not easy, and this all fact makes we all agree that gold is valuable and will be remain valuable in future time. That's why gold is valuable commodity for all of us. Gold prices going up or down or be stagnant are important as gold consumer or investor. So today we are going to see spot gold NEoWave forecasting analysis in long-term, mid-term and short-term perspective. For long-term analysis purpose, first we will study 2.5 yearly chart, then half-yearly chart of spot gold on log scale. This is 2.5 yearly NEoWave chart of spot gold. On this chart, we can see this area has almost stagnant prices that has less important to initiate analytical pattern. Supercycle degree wave began from January 1970s low, that is 34.9. It is difficult to say which pattern is forming with supercycle degree, but certainly it is a corrective development of probably 5 or 7 segmenting pattern formation. First segment is moved up, which labeled with cycle degree wave A, even though this is a faster move but logically not qualified to label impulsion, thus shown with the label colon 3. Next segment moved downward and labeled as cycle degree wave B. Third segment again moved upward and labeled as cycle degree wave C. The fourth segment initially moved downward but suddenly behaved in irregular way and now having chances to go down or sideways. This segment should label with cycle degree wave D. Here remember, at this stage said wave D is incomplete. Applying NEoWave logic on this segment, we can say cycle degree wave D has to enter in price area 968 to 586 and in worst condition up to 376. Time wise can terminate in time area January 2026 to June 2043. Post completion of wave D, we can expect next upward segment, that is supercycle degree wave E. And now for more clarity, let us go for one smaller time frame, that is half yearly chart. Here to study long-term perspective, used spot gold half yearly NEoWave chart plotted on log scale. Let us first draw an implication concluded from the 2.5 yearly wave chart. We already witnessed cycle degree wave A, B and C are completed, and as of now wave D is forming in irregular variation. At this stage it is difficult to say that exactly which pattern is forming here, but we can project irregular flat first. If this possibility gets ruled out, then we will go for triangle or diametric pattern. One smaller degree wave, that is primary degree wave A, began from high of October 2012, that is 1795.9 and moved downward. Then after, next primary degree wave B progressed upward but in irregular way, that is exceeded beginning point of primary degree wave A. But this irregular behavior cannot guarantee of next primary degree wave C failure. This means primary degree wave C need to enter in price area of 1124 to 896 and time wise can terminate in between July 2027 to December 2032. Next, same degree or larger degree wave will open upward, that depend on what pattern forms in this wave C. Let us get some more idea about primary degree wave C on monthly chart. This is monthly NEoWave chart of spot gold plotted on log scale. On half yearly chart we concluded that primary degree wave C is not completed. So let us first draw implication of half yearly chart. The primary degree wave C began from August 2020's top, that is 2075.14. The first segment is a sell-off which labeled with intermediate degree wave A. Next segment, that is intermediate degree wave B, moved upward but not enough. Quickly, given the gain which started next sell-off, that is intermediate degree wave C. Logically, this intermediate degree wave C requires to fall in price area of 1670 to 1542 or may up to 1467. Time-wise, wave C should terminate somewhere in time area, that is Jan 2023 to November 2023. It is not clear that wave C is either impulsive or corrective wave. Depend on clarity, next same degree or higher degree wave can be open upward. To study this wave in more detail, we require to study weekly chart and daily chart. This is weekly chart of spot gold on linear scale. Let us first draw implication of larger chart that we got from monthly time frame. Now we can see intermediate degree wave C began from 1998.39, a high of April 18th, 2022. As of now, this sell-off looks corrective, but not clear whether ended or not. So we need to draw this baseline and observe how prices will behave thereat. Logically, we can say after corrective up move, next sell-off should enter in between price area 1678 to 1534 or may up to 1443. Time-wise, wave C need to terminate in time area of December 23rd, 2022 or later. Let us check daily chart for fine-tuning. This is daily chart of spot gold plotted on the linear scale. The intermediate degree wave C began from 1998.39 high of April 18th, 2020. First sell-off looks corrective in nature, thus labeled with minor degree wave A. Then after upward to sideways phase is minor degree wave B, and next sell-off with minor degree wave C. The rally began from July 21st low, that is 1681, is assumed with minor degree wave D and having target 1803 to 1831 and can extend up to the 1840. Time wise, this need to enter in time area of August 11 to September 27th. But remember, between this area, August 18 can be turning point, so keep an eye on August 18 too. If this may convince you that this knowledge give you trading edge and raise your trading confidence, then join our basic, intermediate and advanced course. For communication, contact us on our email or contact through WhatsApp. Thank you.